Hello and welcome to Money Control's live stream. You're watching Closing Bell with me, Lovisha, Darad, and joining me my colleague Yatin, Mota. And Yatin, we have finally the markets reacting to the US President's reciprocal tariffs. I won't describe this fall as deeper as what we expected, but given several brokerages and even experts have reacted quite positively to the 27% tariffs on India compared to other Asian counterparts. So 27% tariffs on India with 10% baseline, which will be effective from Saturday onwards, and the reciprocal, the higher reciprocal tariffs will be in effect from April 9 onwards. The auto and auto import tariffs, however, will be effective from today itself. Now, how markets reacted to it? Well, better than expected. Sensex down about 300 points and Nifty below that 23,300 levels. Nifty Pharma index, definitely the key outlier today, as pharma products were exempted from reciprocal tariffs compared to 10% of what the street was estimating. We will touch upon this more in detail later in the segment. On the other hand, on the contrary, Nifty IT index felt the most heat on the tariff front as fears of slowdown in US and recessionary fears took center stage. We saw tech heavyweights dominating the Nifty 50 losers list also. Apart from that, Nifty auto index also reacted negatively to it. A 1% cut coming in on the Nifty auto index due to 25% tariffs imposed on auto and auto parts. Yet then all in all, not that bad for markets, but we'll watch out more what is happening on the sectoral front. But what are you making of from the brokerages front?
Lovisha, as you rightly mentioned, most of the brokerages and experts that we spoke to throughout the day, on CNBC Awaaz were of the view that, these tariffs will not impact a country like India, given the fact that other Asian economies, say China, 50% plus kind of a existed tariff is what they pay. Vietnam, Bangladesh, Pakistan having tariffs which are almost, 1.5 times to almost 2 times India's tariff, which would make their exports also unviable. Or probably expensive than Indian, homemade products. Talking about brokerages, Morgan Stanley clearly believes that India, as a whole would be a beneficiary of the tariff regime. Obviously, the Indian government is also negotiating hard with the US counterparts to really resolve this deadlock and probably sign a trade agreement very, very shortly. In terms of preference, they are preferring countries like India, and they are cautious on countries like Taiwan, Japan, as well as South Korea, clearly given the fact that their tariffs are at a much higher rate than their expectations. Bernstein, on the other hand, is quite constructive on Indian equities. In fact, they believe that the heavy tariffs on Indian goods will not sustain. In fact, they are expecting in the second half of this calendar year itself, or probably by September 25, we could see resolution and the tariffs coming down. Obviously, IT services and pharma were the key positive surprises because they were exempted from the tariffs that Trump has imposed across the board. Probably pharma stocks saw some bounce back. IT, however, on the fears of a slowing US economy, saw some sell off, especially the mid-cap IT names like Persistent Systems as well as Coforge.
That's right. Pharma index, that was one of the key outliers today. But let's look at some of the top Nifty gainers and losers. Power Grid, 4% uptick on higher trading volumes. Pharma stocks like Sun Pharma with about 3% uptick. Cipla with about 2.9% uptick, given that there was exemption on reciprocal tariffs on that front. Ultratech Cement with about 3% uptick, we can see. And other than that, we can see Shriram Finance also on the upper hand too. Coming to the contrary picture, the Nifty IT index took to the chin. Nifty IT index fell about 4%, and we can see several of the counters dominating the Nifty 50 losers pack. TCS, Tech Mahindra, HCL Tech, Infosys, all of them seeing the losing end with about 3% cuts or so. But coming from the broader end of the markets, if you look at the mid caps and small cap indices, small caps definitely gained on a higher end, but both of the indices have outperformed. Yatin, what are you gathering from this space?
Overall, if you look at the mid-cap end of the market, quite volatile. However, certain sectors and stocks were in focus. So, if you look at the gainers, we had stocks like Jubilant Pharma, Raymond, Trident. All of these, textile stocks, the likes of Gokaldas Exports did well. So, 5-7% gains coming in for all of these stocks. If you look at other gainers, we had IDFC First Bank moving 5.5% after a good quarterly update. GMR Airports doing well, 5% higher for that stock. What was not doing well, as I mentioned earlier, mid-cap IT stocks like KPIT Technologies, Coforge, Persistent, down anywhere between 8 to 10%. Stocks like Dabur, after a weak, quarterly update, saw 6% decline, and so is the case with KC International, wherein the stock fell nearly 5% in trade.
All right, now let's break down some of the stocks that did grab limelight in today's trading session. Well, the first is your worst sectoral performer of the day. That is your Nifty IT index with about 4% downtick after US President Donald Trump announced tariffs across as many as 180 countries. Basically, it was a sentimental play out in the tech sector. We saw the US futures also declining sharply yesterday, and even tech-heavy Nasdaq futures was down about 3%. While the IT sector is not directly impacted by Trump's tariff order, but higher tariffs can lead to slower GDP growth, which in turn would hurt the services sector. Now, what the analysts at Jefferies are saying is that the higher tariffs could lead to decreased demand from manufacturing, logistics, as well as your retail verticals. Also, now that the recession fears have also taken a center stage, given all the imported goods will attract higher tariffs and ultimately get expensive, it will in turn dent the US consumption. So, any slowdown or recessionary fears can impact the Indian software exporters too. On the other hand, JP Morgan has said that given the fall Nifty IT has seen this year, a lot of negatives have already priced in, and this is just a temporary setback at this present. Yet then TCS will kickstart earnings of large cap IT names in just 2 weeks, and any management commentary on possible slowdown or even cut in spending would be keenly watched out.
Absolutely, and the kind of commentary that we could hear from IT companies would be very important for the quarter, not only for the financial year, but the kind of feedback that they're getting from clients is something important we need to track, because for the last 2-3 quarters, be it US elections, be it rate cut, be it a lot of changes that the Federal Reserve has done, the global environment still remains quite volatile.
That's right. Now that we have spoken about the IT sector, let's touch upon auto sector also, which also saw major declines following the imposition of 25% tariffs on all cars and auto parts imported into the US. Now this tariff will take effect from today onwards, and auto ancillary players, particularly Bharat Forge, was one of the hardest hit stocks. It saw a drop of about 6%, and other shares like Balkrishna Industries and Samvardhana Motherson also declined up to 4%. Among major auto player names, we saw Bajaj Auto, Tata Motors, TVS Motors all also witnessed losses. Now, what the 25% tariff on auto and auto parts have raised the concern is that the prices of auto parts would increase and ultimately reduce the demand for Indian auto products in the US. So we can lose out on the competitive edge here on. And now that we already have 25% tariffs on steel and aluminium imports also, it adds to another layer of worry for Indian automakers. Now, companies like Sona BLW, Bharat Forge and Motherson Group, they could face the significant impact as they derive around 18 to 40% of revenue from the US markets. So while on an overall basis, India's auto component exports to the US account for just 1/3, which is less than significant, which is just 2% share, it is still lower compared to what Mexico's, Canada and even China share dominates. Yeah, then all in all, it is a very mixed sentiment. While on one hand, it will increase costs for domestic producers, but since other Asian counterparts are facing higher tariffs, it means a positive for Indian exports to US.
Yes, but except for Tata Motors, we don't see any big exporting house which is there. Maruti Suzuki or other companies like Ashok Leyland or be it Bajaj Auto, most of the exports comes in from the African countries or probably the underdeveloped countries globally. Tata Motors, yes, gets impacted because 20% plus JLR volumes comes in from the US markets, which is at risk. A 25% tariff, but no change, really to say when it comes to the auto part exports also. Companies like Bajaj Auto have seen some bit of resilience, but if you look at auto ancillaries like Motherson Sumi, which is Motherson Samvardhana, you talk about companies like Bharat Forge, they have an exposure. RK Forgings, we see exposure. We have Sona Comstar also, which has exposure to the US markets, which is in excess of 20-25% or plus. In case of Sona BLW, that figure is upwards of 40%. So all of these stocks have seen some sell-off, but last week it was already known that this kind of tariff will come in for the auto companies and auto ancillaries. So the price has already existed. Today we haven't seen deep cuts in the auto sector, something like we saw for the IT sector. But Lovisha, let me talk about the pharma sector, because this is one sector which was quite strong in trade today. In fact, most of the pharma stocks, be it Lupin, Dr. Reddy, Zydus, have seen a 4 to 5% kind of a gap up. Obviously, some bit of cool off from intraday highs. But if you look at the positive surprise here, the entire pharma basket, the entire India generics business hasn't seen the wrath of Trump's tariffs. In fact, the pharma sector has been exempted under the tariff regime which comes into effect in the few days. In fact, CLSA says that pharma exemption is a positive surprise. They were expecting a base case tariff of nearly 10%. And the stocks already reacted negatively to the entire tariff announcement that Trump was trying to communicate. No announcement on that front means a positive for Indian pharma companies. They are quite bullish on stocks like Aurobindo, Zydus as well as Dr. Reddy's because the US exposure is quite high. Citi on the other hand believes that the pharma exemption is in line with their expectations. In fact, a low probability was always there when it comes to the Indian pharma tariffs because we are giving US export product in the pharmaceutical space which is quite affordable, and hence the government has decided in the US to keep pharma out of the loop of tariffs, and obviously other essential commodities are also exempt from these particular tariffs. But yes, pharma sector clearly hogging the limelight for the trade today.
Yes, absolutely. Nifty Pharma Index did hit a 1 month high today also from 4%, but however trimmed its gains, settled at 2% at this point of time. Now shifting focus from pharma sector, while we discussed about IT and auto sectors which still has some scope of revival, let's talk about shrimp stocks because that took a major blow in today's trading session. We saw the shares of Avanti Feeds, Apex Frozen Foods that declined up to 18% after the reciprocal tariff measures. Now what analysts at Incred Equities believe is that the new tariff on shrimp exports stand at 45% now, which covers anti-dumping duty, countervailing duty, and of course the new reciprocal tariffs too. Now this would ultimately make Indian shrimp more expensive in US, and analysts said that it could halt exports to the US too. Now for now, the US imports marine products which is worth about 22,000 crore rupees annually from India, and the new tariffs could lead to severe supply shortages within the next 24 hours. That's what the analysts and experts have been estimating. Yet in both Avanti Feeds and Apex Foods, they derive more than 50% of their revenue from the US markets. So this is quite a negative for both of the companies.
Yes, negative, but the exact impact of the tariff will be seen after some time, Lovisha, because there are two things. One is the shrimp exports from other countries in the Southeast Asian region have a higher tariff allocated to them. So what really matters is the benefit on a relative basis, and whether or not these tariffs slow down the demand in the US, because once the tariff come into place, the export products from a country like India will become expensive in the US to buy. So whether or not it impacts demand, whether or not other Asian countries have the trade agreement in place to lower their tariffs or probably they don't, is a question of time. So it is too premature right now to talk about what impact does it have on a sectoral theme like shrimps or IT or probably autos. But yes, given the fact that the slab of India is much lower than the Asian peers, puts us in a better position to other countries.
That's right. But now that we are out of this tariff uncertainty, we'll watch out how the markets react tomorrow, the last day of the week also. But with that, we've come to an end of this edition of Closing Bell. It's a wrap from Yatin and me, but thank you for watching.